Okay, welcome back. Here's the third of our series of short videos looking at aspects of the Brexit debate. It's hugely topical at the moment, and I think examiners across the range of boards may be looking to ask or expect students to be aware of some of the issues surrounding the UK's decision in 2016 to leave the European Union, and in particular as it seems likely now to leave the single market and the customs union. In this third video, we're going to take a quick look at the micro-macro distinction, the synoptic economic distinction, and think about what might be some of the micro and macroeconomic effects of leaving the EU. There's always some overlap, of course, and some students tell me that they find it difficult to make that distinction between micro and macro. So hopefully this short video will help you along the way. So when we think about Brexit and the possible microeconomic effects, then we tend to be focusing on particular aspects of the economy at the level of the household, the firm, the market, rather than the economy as a whole. So one could consider, for example, labour market issues. What will happen to the supply of labour to the health service? What will happen to the supply of labour to the building industry? What will happen to wages in social care, for example? That would be a microeconomic question you might want to ask and analyse and evaluate. Will leaving the single market have an effect on the price level for consumers? What will happen if there's a tariff on British goods and services going into the EU and a tariff on products coming into the UK? What will happen, for example, if gas imported from the EU is subjected to an import tariff? That's a microeconomic aspect. Yes, it does have macro consequences, but start with the micro. What might be the consequences of leaving a single market for market competition, for domestic firms who have monopoly power? How will it change the contestability of markets, perhaps? Will there be a consequence for business profits, for example, if we leave the EU, and costs and revenues? And the environment also is going to be a key factor. What kind of environmental policies might the UK develop independent of the EU once we've left the orbit of the single market? So I think when you come to microeconomics, it's a good idea ahead of the exam to think about some of the key industries, the key sectors that you might want to focus on, and in particular that the examiners might want you to write about. I would suggest industries such as farming, pharmaceuticals, aviation, the transport sector, car making, and even things like healthcare and education, the impact of Brexit, for example, on our universities. Effect of Brexit on our research industries, creative sectors, and much else besides. Whenever you're thinking about those individual sector effects, then you are thinking about the microeconomics of Brexit. The evidence, it seems to me, that the three sectors most reliant on the EU market for revenues are mining and quarrying, so oil and gas, manufacturing, car making, for example, would be a good example to choose, and crucially, of course, financial services, banking, insurance, consultancy, and much else besides. On the other side, businesses that are heavily dependent on inputs would be things like healthcare, social care, getting skilled labour, the construction sector, farming, catering, and other types of food industries, for example. So there's a lot to think about when you come to the microeconomics of Brexit. It was a big decision, a decision that clearly made the headlines and came as a major shock to people, especially to the Prime Minister, I guess. What about the macro side of Brexit? Again, this is where we widen our canvas and we start thinking about some of the possible consequences for key macroeconomic indicators. Unemployment, balance of trade, the pattern of trade, what might happen to inflation and interest rates. Will Brexit affect Bank of England decisions, for example? Going forward, what will happen to Brexit's what will be the effect of Brexit on our growth rates, on living standards? Will they be higher or lower than they might otherwise have been? What will happen to government tax revenues and the ability to fund public services? Will the UK leaving the EU be able to impose or change VAT, for example, away from the minimum rate of 5%? How will Brexit possibly impact on developing, emerging countries with whom we have a relationship? How will it shape, for example, UK aid policy going forward? Fundamentally, what will be the consequences of leaving a customs union, of leaving the single market, for the competitiveness of the British economy, the supply side of the economy, and following on from that, the prospects for our growth rates? These are the kind of macro aspects Hope you can see the difference between macro and micro here. So there are big decisions. What I thought I'd just do is give you maybe 3 micro and 3 macro points you might raise. So this will be the decision of leaving the single market and the customs union. So one point could be that we're leaving single market, customs union, so therefore it may lead to higher tariffs on EU exports. A tariff on EU products would increase the price of imports coming into the UK. So UK consumers might pay more for their gas, and UK firms will have higher costs. Their profits may fall, and consumer welfare might suffer as a result. However, the evaluation point is that assumes that the UK is unable to negotiate a wide-ranging Canada-style trade deal with the EU before Brexit is finalised. Of course, the government hopes that they can do that to minimise and mitigate the possible effects of tariffs. Second micro point could be to do with the labour market. So if we leave the single market, it could be the case that the supply of skilled and relatively unskilled labour from the EU will dry up. Some UK businesses, some UK sectors, such as farming, might suffer from a decline in net inward migration. So things like hospitality and construction might suffer skill shortages, and that would drive up wages potentially. However, the evaluation point is that if we're making less payments to the EU in terms of our trade, then there's more money to be invested in apprenticeships, more money to be invested in training for UK workers, which could help improve the labour supply, improve the stock and quantity of human capital. A third micro point could be that if we leave the customs union, if we leave the single market, there's going to be some delays, cross-border delays, as lorries stack up, as we have to check the contents, and the border officials struggle to cope with this new trade barrier. And of course, many products, a car engine, for example, or a piece of technology, they cross borders many times before the final product is made. And if you're a business using just-in-time delivery, then you really want to minimise those border delays, otherwise your costs will go up. The evaluation point is, however, it depends on the agreement we have with the EU. A lot of UK exporters are already fully compliant with the European Union regulations, and actually they may well be able to cope with that. Indeed, post-Brexit there might be less red tape, because we won't have to deal with lots of EU regulations, for example. So there's 3 micro points. I think a couple of industries I really want to focus on just for a few minutes, if you bear with me. One is the food and drink manufacturing industry. It's actually the biggest part of manufacturing in the UK. 16% of our total manufacturing output is food and drink making, and making processed foods, making those lunchtime products you put in the microwave, making soups and making cereals, food manufacturing. One of the big fears they have is that there could be disruptions to the supply chain. In particular, the UK imports a lot of food products, which eventually get made into final consumer products. They also import a lot of food manufacturing technology, the machinery. And of course, if there's a tariff on that, that could add to the costs of those big industrial economies of scale food makers. And I think farming is another good example to think about. We only actually grow 60% of the food 60% of UK grown food is consumed in the UK. So 40% of UK grown food is exported, not just the EU, but to other countries, but mainly to the EU. So there could be a tariff on UK food exports. That might be an issue. On the labour market side, crucially, the farming industry does fear not being able to replace the many thousands of employees who work as farm labourers. Seems to be the case that lots of UK people don't want to work in that sector. That'll be an issue, labour shortages. What will happen to CAP after Brexit? Over half of farm income in the UK comes from European farm subsidies. The government's agreed to match those payments until 2020, but what about farm support after that? Where next to the farming sector will the UK find an alternative source of farm support, or will farm support decrease? These are big sort of microeconomic issues to think about. Here's a chart showing average tariff rates. So, for example, if we didn't get a free trade deal following Brexit, dairy products would experience the highest average import tariff of 42%, with a potential maximum rate of 122%. Sugar and confectionery would have a tariff of 25%, cereals 15%, fruit and veg 11%. So think about the consequences for inequality, think about the consequences for food prices, for the cost of a basket of goods and services for the average family. There could be quite significant micro effects in terms of the real living standards of individual families, of households. And here's a chart showing the scale of the dependence on farm labourers. So as of 2015, just under 23,000 EU-born people working in farming, employed in agriculture in the UK. That figure is likely, we think, to fall quite significantly. We don't have the data yet for 2016 and 2017. It's likely that figure will fall sharply if it hasn't already done so in the next few years. And again, migration figures for the UK on average, in recent times, the figure's been going up. Obviously, the net figure is the difference between the inflow, which is blue, minus the outflow in black. So, for example, 2015, the net migration into the UK was just over 1/3 people. That fell to 327 in 2016. And we can see already, post-Brexit, that figure is coming down less than 250,000, which supporters of Brexit will be celebrating. Many people in business think that's not good news for the quality and quantity of labour who are able to produce goods and services. The macro side, again, as we talked about in the past, you're just looking for just good, solid, standard macro points. Okay, so positive point: leaving the EU will allow the UK to make free trade agreements with other nations. That's going to cause our exports to countries like India and China and sub-Saharan Africa to surge, which would be a stimulus to aggregate demand or to GDP growth. But we know that these trade deals with non-EU countries can take a long time to deliver. The Canadian agreement, 7 years to sign, 3 years to ratify, nearly a decade to get that agreement in place. Second macro point is that leaving the single market will allow the UK economy to limit migration. That's going to provide people in the UK a chance perhaps to find work and perhaps also put some of the downward pressure on house prices and rented housing. But we already suffer from skill shortages, particularly in healthcare, particularly in construction, and some industries will undoubtedly suffer. That could increase some cost push inflation in the UK. Third point, leaving the single market diminishes trade with the EU and will cut in with investment. The UK will become a less attractive place to invest. It's our biggest export market. Why would we cut our nose to spite our face? Tariffs would make the UK a less attractive place to base your production and then sell to the EU. But of course that depends. It depends on the trade deal we make with the EU, and crucially, foreign direct investment doesn't just depend on tariffs. It depends on relative unit labour costs, productivity, tax rates, regulations, etc. Many factors affect FDI. Brexit is just one of them. I think the key point I would make here is that the latest projections from Whitehall suggest that the UK government believes that all the main Brexit scenarios we talked about in the second video will have a negative effect on growth over the next 15 years. But there is so much uncertainty, obviously, in terms of the debate. One of the uncertainties is London. Will London maintain its competitive advantage in services? Will London remain the sort of dominant centre for financial services, banking, foreign exchange, derivatives, all that kind of stuff? London does have many strengths. Okay, it's got a lot of skilled labour, it's got a lot of knowledge and know-how, it's got the infrastructure, it's got the reputation, it's got language, it's got a very good legal system, it's got a perfectly situated time zone. London has many, many strengths, but there are some threats. So Frankfurt and Dublin seem to be emerging as the main destinations for banks and others to relocate out of London. Paris, Luxembourg, Brussels. There could be a loss of, 30,000 jobs out of the UK across all the financial services. Who knows? It's lots of uncertainty. London is looking at this very closely. Another macro aspect is how much we pay into the EU. Of course we do. We pay a contribution to the EU. In net terms, we pay about £10 billion more in than we get out. That figure obviously will end when we've finished our transition outside the EU in a few years' time. And then, of course, there's the divorce settlement. So if you make a split, you have a divorce settlement. Basically, the UK and the EU have agreed to the kind of methodology for calculating sort of divorce settlement, but they haven't yet come to a precise amount. The Prime Minister thinks it's going to be in the range 35 to 40 billion pounds in terms of the UK meeting its existing commitments to the EU. A wider point would be the impact of Brexit on developing countries. This is if you're interested in development, if you're interested in human development and that kind of international globalization debate. Will leaving the EU be a negative for some developing countries, perhaps? Or will Brexit actually be an opportunity for the UK to strike new trade and investment deals with one or more developing nations in Far East Asia and Sub-Saharan Africa? Well, there's so much uncertainty, we won't talk about this too much tonight and today, but think about the likely consequences for aid, for remittances if the migration flows change, and for the wider prospects for growth and investment in those countries. Finally, a few depends on. So really strong evaluation in the Brexit debate. You can't go wrong if you put a couple of howevers and it depends on. So where next for the economy post-Brexit? Well, crucially, it depends on the scope, scale and the timing of trade deals, both with the EU and other countries. So how quickly can the UK negotiate a wide-ranging trade deal, particularly with the EU? It depends on whether the UK can keep significant numbers of skilled workers. There's already quite big fears in the creative industries, in coding and software and architecture, in science and engineering and research. There's quite big fears that some of the brightest people will leave the UK and go and make their careers elsewhere. How many people will we lose in the NHS, for example? What will be the consequences for staffing social care? Consequences for the university, for example. Will more students come to the UK after Brexit, or will fewer come? We don't know, but the university sector is clearly very important, nearly 3% of GDP. It depends on the ability of UK firms, particularly manufacturing companies, maybe a car firm, maybe a cement firm, maybe a construction company. Can they modify their supply chains? Can they get their inputs from other non-EU countries, particularly if there are border delays? Can businesses successfully pivot a little bit away from Europe towards Asia, towards the Middle East and North Africa, towards Sub-Saharan Africa? Can they successfully pivot and find new markets? Crucially, it depends on whether the UK government can continue to fund farms, workplace training, research, universities. And I guess there's a kind of longer term, it's my final point really, the longer term dynamic effect. If you're outside the EU, does that free up businesses to become more dynamic, more innovative, more productive? In which case the prognosis for the UK will be strongly positive. Or does leaving the EU have a negative effect on growth and jobs and profits? And ultimately that hampers productivity and innovation. A long-term dynamic effect could be negative. So macro makes a big difference here. Keep in mind that the macroeconomy is the aggregation of microeconomics. So what happens in terms of Brexit to individuals, to businesses, to sectors, to regions can be aggregated to give us the final macroeconomic effects. All kinds of uncertainties. My instinct when you're revising this topic is to think about key sectors: financial services, healthcare, cars, transport, energy, what have you. Think about those key sectors which together form a significant bulk of the economy, and that will give you some clues to the macro consequences going forward. Okay, that's the end of this third video on Brexit. We plan to do an update once a year on Brexit so that everybody has a really good set of resources ahead of the next set of exams. Keep a lookout on the blog. We try and blog about Brexit quite a bit. If you go to tutor2.net/economics, there's a blog there, and there's lots and lots of kind of contemporary up-to-date stuff on Brexit and the news as it happens. Great way of keeping up to date ahead of the exams. Okay, thanks a lot. Take care.